Ladies and gentlemen, shake my hand and welcome to, I guess, our very first video of the year 2023. I know we're already all the way in April. There's so much to explain, and yeah, I'll get into that. First of all, thank you so much for those of you who are still, subscribed, still around, still waiting. If you got this video via our mail list, if you're a 365 student, then there's a very long email I've sent to you explaining where I have been and what I have been doing with my 90 days of silence and reflection and why that was a necessary part. And if you're not really part of the academy, but you are subscribed to the channel, then I'm hoping that some of these stories will swift through in conversations as I try and reconnect with everyone. I am back and I'm not going anywhere after this. It's been a beautiful break, a necessary break, I must say. Some of it came through, family trauma, and then out of it was born this necessity to just step aside. But I'm glad everyone is doing well. Well, I've got a quick idea. I have not been trading this year, actively trading. Most of the trades that I was involved in the year 2023 were blind, set and forget trades. That means I set my pending order sometime last year, and price has just been moving along, with me. Sometimes losing, sometimes winning, right? But as usual, risk reward ratio 1:3 covers the basis. So I want to get back into the game, but I can't actively run a massive war, traders war room like I used to. I am very rusty in terms of sentiment. I'm rusty in terms of the numbers, the facts, what the Fed has been doing. There's so many things I need to catch up on. During my 90-day break, the rule was very clear: step completely aside. I was not running my trading flow. Someone else was doing that for me. I was not involved in the academy. It was a complete cold break. So as I warm up, I want to warm up back into the markets with you in the month of April. And what that means is I want to do these short videos, 10 minutes maximum. So I'm actually grabbing my stopwatch, believe it or not, and very soon or immediately actually, I'm going to have my stopwatch on, and within 10 minutes I want to break down Euro USD. I don't think it'll take me more than 10 minutes, but I want to do one asset, one short analysis per video. All right, so I'll most likely do about 3 of these videos per day, every single day up until the end of April. Then I will start my traders war rooms after I've actually gotten a feel of the market. All beginners and people who are out of touch and people struggling and people who've been trading without me. And I'm very grateful for that. By the way, I saw all the love and I'll keep emphasizing this in the videos, but I really don't want to take too much time. But I appreciate every single one of you that reached out. Please note that I was going through a 90-day period of silence, so I could not respond to one without responding to all, right? So in principle, I had to kind of like just really accept the love but not reach out, and I do apologize for that. And I promise to be getting back to everyone, right? So I've been experimenting a couple of things here. Right, so stopwatch on. I'm pretty sure this will take about 5 minutes, and that will be the end. We're going to start with Euro USD, and that's because Euro USD is fundamentally number one, the most highly traded asset in the world, right? So it's the most liquid asset. Number two, it generally gives us a sense of the market. So what I'm doing is I'm trying to warm back in. I was last active halfway through December last year into the markets, and since then I've been a cold turkey. So I want to understand what's been going on, because last year we were very bearish. Last year, with the Fed increasing interest rates, last year we had a very strong dollar because of that. Last year we had a whole lot of things. QE was at the back burner with macro and micro policy. But not only that, but the banks were creating specific supply and demands that participated and went with the flow. I was very careful, by the way, to make sure I'm using my TradeView account that is completely for free, so that you can also do this, right? So this is my free TradeView account. That is the one that you don't even have to pay for anything. And I found this quite interesting. So I'm going to come out of this pre-marked up chart that I've had for a very long time, and I'm just going to come to, let's go to Saxo, but you could choose any broker. I'm just looking for a free chart to mess around, right? So this was us last year. Remember, we were counting down all these multiple supplies. I remember doing this with you guys on the channel, and these supplies paid us very well. But something has changed. You know, I'm just breaking down Euro USD in this particular video. Something has changed that is literally negated 12, 11, 10, 9, 8. So about 4 to 5 supplies already. No, in fact, 6, 7, right? Almost half the supplies created from last year, April 2022 to April 2023. Markets have equalized. Banks think in 3 months, right? Take profit in 1 year in a 10-year plan. We can see that this is the 1 year take profit target. Like, it's done. Banks have completely turned their eyes on the target on this particular asset. So we want to really kind of like break down Euro USD, and then I'm going to leave you to it. Again, the idea is to give very short videos, short analysis. I'm going to take this information, I'm going to make notes as soon as I'm done recording this video. So I now have my Euro USD asset profile. Then I'm going to move on to the next one, move on to the next one. By the end of April, if you go on with me in this journey, we would have profiled over 100 assets, which will put me in a better position to start allocating capital, to start knowing where to start pulling my swings. In it, you will also get direction plan like I am right now. You will notice that TradeView is finally given everybody access to long-term charts. I find that quite interesting, and a lot of it is fundamentally because a lot of traders don't even use it. So it's very hard to sell it on the pro, right? So please use this opportunity. I don't know if it's forever. I don't know if it's something that just changed. I have no idea. But I'm going to start on the 12 months chart. Why? Markets move in a 1 year take profit cycle, in a 10-year logistical plan, and we see that thinking through the 3 months chart. We call the 3 months chart our presidential chart. We call the monthly chart our governing chart. This is embedded in our trading strategy. Look at the 12 months chart on Euro USD. This immediately should scream obvious. What happened is simple. The stuff I taught most of you who are subscribed and are students in module 1 is at play. Markets have arrived at a 1 year demand. A 1 year demand. This is the 1 year chart. That means one candlestick represents 12 months. One candlestick represents 1 year. This is the whole of 2022. Against the whole of 2021, etc., etc. And markets finally arrived, right? Finally arrived from the 2008 crash, the biggest banking crash. You know, let's not call it biggest because there's been a lot of stuff happening since 2021. But from the 2008 crash all the way down here, markets returned to the 2002 demand. Anyone who knows the economic history will know that there was something called the tech boom in the early 2000s. So this demand that took the markets out of the tech boom and led the markets into the 2008 crisis has finally brought price back to the tech boom. Now, if you do your math and you really follow, you know, the analysis that I did with you guys on the Ray Dalio, you know, long-term economic wave of price, you will know that Ray Dalio is very big on understanding these type of crises and understanding the fact that markets move in a specific mindset, right? So, or there's wrong with my trade view, or is it my internet that's delaying, you know, my drawings on the chart? So maybe I should just slow down on the drawings. I apologize. We are 5 minutes down on the clock, so I'm gonna have to wrap this thing up pretty quick. But I just to bring it to mind that there is a very short video that we did where we broke down Ray Dalio's analysis, right? And look at this, price has arrived at the first big market bailout after the tech boom crisis, and it's a demand in 2002 that led us to a 2008 market crash supply that's brought us back all the way down to the, you know, in a period of about 20 years, so 2 10-year processes. So naturally speaking, when you make contact with the demand, we expect price to go up, and that's what seems to have been the theme in 2023. If any of you watched my old videos, you saw me break down Bitcoin towards the end of November. I was right and wrong at the same time. I was wrong about the fact that I didn't get the order block that I wanted. I told you, however, in my last crypto analysis video in November, and I'm going to do a playback when we get to the crypto segment of the videos this April, I told that there were 45 days left before Bitcoin would boom up. 45 days, and Bitcoin boomed up on the 46th day. Now, that's crazy accuracy, right? The only thing that I didn't get, that the market didn't give, rather, was that we really, really needed a touch at that 12K demand. That 12K demand was not used. We went back to our module 1, and markets created a fresh demand, an original demand, which we'll get into right now. Or no, not right now, I apologize. I'm so excited to be back on it. I really missed this Euro demand, a fresh demand, and a valid demand. It's got all the works in it. If you've done my course, you know what to look for. You know the type of imbalances to look for. It's fresh, it's untouched. Then we move to our presidential chart. Our presidential chart is going to of the banks. The banks think in 3 months, banking quarter, right? So I went away for 3 months, 90 days. There is something sacramental, something almost religious about a 3-month process, right? You know, there's a guy called Busita Bagwai in South Africa, was technically a global entrepreneur, and I got a chance to read his book. It's not necessarily his latest book, but it's a book I've been meaning to read, and it's got in there something called the VT test, and it's basically a simple question: can your business survive 90 days without you showing up for work? Because if it can't, then you don't have a business, right? You simply have created employment. So I'm very proud of my trading floor. You know, those guys really held it down. You know, trades are up, everything is running as if I was there, you know, so I'm very happy about that. But anyways, we're looking at the 3-month here, represents 3 months, and you can see as price was fluctuating down from the 2008 crisis into the 2020 COVID crisis, into whatever we had with the Fed raising rates, you know, the whole of last year. You can see that price has finally made contact all the way down to that 1-year demand. There's a 3-month chart, and we can see even from the 3-month perspective that the governor is in complete alignment with the 1-year chart, right? The 1-year chart is a deity chart. It's the chart that controls everything. It's how bankers think. After selling for so long, since 2008, it is definitely time to take profits. And you can see as they reduce their shorts on Euro USD, prices plummeting, starting to go up on the demand side of things, right? So now on the governing time frame, I want to be smart. I want to start marking out some zones that are going to appear with the trend that I'm in. It looks like for a long-term swing to positional trader, you really, really want to be a buyer in this market. I'm marking up some old zones that we dealt with last, some old supplies that price came into, in as early as 2020 during the COVID crisis, and markets just continued from that, right? So there's look at that from 2021 January, and please pay attention so that you can catch me out if I'm making this stuff up. And I'm almost out of time. I know, but look at this from January 2021. Oh, big green out candle here, somewhere here. This is January 2023, right? So we've got our first clean sell-off into demand, and price seems to be coming back. Then we move to our governing chart on the monthly time frame, and that's where we start to see our immediate areas of control. And I teach on this stuff in module 1. Some of you, I keep begging you, please go back to the basics. Before you ask for new information, you should be making so much money from this stuff. If you're not, it's because you now know the basics, but you've not mastered them. Now I can make my zones a little bit tidier, right? Because I'm looking at the governing time frame right here. So I'm going to tighten the supply zone here, acknowledge a tag there, and then tighten the second supply zone like that. Right, and now I've got monthly areas marked up, which are very important because these monthly areas are going to tell me where price is going now in the immediate sense, obviously being in the next 1 to 3 months, right? We can acknowledge that there was a massive break of market share to the downside, and again, price is falling onto the 1-year demand. There are safer, lower areas of value, but we don't know if price will ever make it down there. We don't know how much buy power there was on this demand here, the big area of value. We could find out, right, by compiling accurate, correct, COT data, which we'll get into next month when we're together, right? But right now, we just want to get a sense. Clean price. You can see we've got a parabolic move to the upside. you can see if this way you'd rather say there is a change of character, why a supply was taken out. When you get an area of value, an opposing area of value, taking out an opposing area of value, believe you me, that is the trend creator. And there you go, supply has been taken out because a 1 year old demand, well, it's not even 1 year old, it's an annual demand, right, all the way back from 2002 is in control. So all these buyers, all these institutional traders, all these institutional buyers have been waiting for this moment, and they're not slowing down for anyone. So we can move our first area of value to somewhere here and assume that price might try and play might try and slow down, might try and distribute. But I think it's safe to say markets are going to bulldoze this area sooner rather than later. I'm going to switch candlesticks now on the monthly time frame because I want to understand the holistic nature. And I'm sorry if my mic was a bit, I didn't notice my dreadlocks were on it, right? So I hope you can hear me loud and clear. Right, look at this. This is clean. All right. If I'm looking at that Kinahashi candlestick, volume-based candlestick, there's literally nothing there. What you could say is this area here is going to be an area of retracement. That's a good assumption. So what we could do is we could pull up a bearish Fibonacci just to see when price was coming down, when the bears were in charge, right? What was the plan here? So if I draw Fibonacci, I can see that this area is in my golden area of value. If I switch back to normal candlesticks, I can find an order block to kind of like supplement that knowledge, but I'm not going to forget that the long-term perspective right now is to go up. But we welcome retracements, right? So our governing time frame is now starting to tell us the politics of the day. This video is slightly longer than 10 minutes because I spent a lot of time at the beginning introducing, rekindling and acknowledging all your amazing messages. And once again, thank you for that. But I promise you, they will be very short. So I'm watching the stopwatch. It's going crazy, but I'm almost done. I just need you to remember how we do our basic analysis, right? So I acknowledge that there's a supply here, number one. Number two, I acknowledge that it might be a good place for a retracement to occur, right? But I cannot forget that there is long-term. When I say long-term, I'm talking about the next year or so, the whole of 2023. I can't ignore the fact is your friend. I can't ignore the fact that the major trend right now is a buyer's trend. Right, I'm going to go to the weekly time frame now. I'm going to delete the Fibonacci because I've got a charts OCD and it's just really clouding some space there on the charts for me. Right, there we go. Right, so the Fibonacci has been taken out. Right, so now I'm on the weekly time frame and we want to start to really look at our immediate areas of value, our immediate areas of control that are going to be affected by short to medium term trend, right? So just because there's a supply and we're saying price is going to go up long term does not mean we have the right to ignore the supply. You ignore a supply, you generally tend to lose, right? So we want to be strategic. I'm going to go back to our Kinahashi candles to see how significant these areas of value are, to see how significant these order blocks were, right? So right now I'm simply just having fun with price. I'm letting price talk to me, and I really miss this. See, my plan was to go silent until the month of May, by the way, because I can't just come back and just start doing war rooms without warming up, without understanding the market. And I thought this might be a better way to get back into it. So if you guys appreciate this, please do comment. I would like to know your thoughts. Short videos for now, 3 times a day, 1 asset per video until we're ready for war rooms, right? So all I've done right now is just mapped out what's happened so far. So far, markets got in touch with a very valid weekly supply. You see price made contact and drop, but price didn't fall all the way down. No. In fact, price created a bullish Fibonacci level. I'm pretty sure this is just a PCP drop. So you need to understand, sometimes a supply or a demand, or rather an opposing order block or an opposing area of value that goes against the trend. Right now, we say the long-term trend is a buy. So an opposing area of value is a supply. Some of these supplies are used to create retracements. What do retracements do? Retracements allow us to get better ins or allow us to continue with the long-term buys. And you can see that this is at 0.23 in between 0.38 and 0.23. which we've always said in our trading in module 1. And if you still don't have access to module 1, I am back. The academy is open. Get it now. Please remember, this is a PCP, a potential continuation pattern confirmed by Fibonacci, assisted by supply, right? So the supply is not strong enough to drag price all the way back down, but it did give to retrace. Retrace price going to come back a little bit stronger, or rather price is going to continue on its journey. If you go back to normal candlesticks now, when we're talking about a weekly supply, I'm looking at this weekly bearish engulfing pattern there. That's the supply. To all the 365 students who've been hosting their own I don't know what to call them, war rooms or meeting. That stuff is inspiring. Please never just sit on your hands waiting for someone. I really don't want to create followers. I want to create independent traders. And I am aware that my absence affected you, and I apologize for the negative impact it had, but I promise you I am a better person for that break. And sometimes I have not taken a proper break in 3 years, so this was well overdue. Right, so let's delete these arrows so you can see clearly now. So price hits a supply goes into the PCP range. The PCP range is then facilitated by a demand. So that means if you're here and you're not like me on a break and you took a buy here, you're in the money. What am I doing? I'm back testing, I'm teaching, I'm doing analysis, and very soon we're going to be in a position to plot a trade. So there was a valid demand there. We used the weekly supply to push price down to the weekly demand. The weekly demand, which was a PCP level confirmed by Fibonacci, and price kept going up. So that makes sense, right? So price is going up. There's a weekly push for price to keep going. I'm going to delete the Fibonacci now. Right, so now I've got a weekly supply that has been tagged once, a weekly demand that's been over tagged, and price wants to push back up to that supply. I want to acknowledge a couple of significant areas of value. For example, I don't want to ignore the fact that there is a lower demand on EURUSD that is fresh. Right, but I want to test the freshness of this demand. So I'm going to go back at Kinihashi. I want to see if it's that significant, right? Sometimes the Kinihashi will pick the order blocks up, sometimes they won't, right? We won't make sense of that right now, or I'll teach on that another time, right? So there isn't an order block there, but I'm going to leave it on my chart for now because I don't want to use an exhausted area for my next trade into the future, right? The next thing is, I know the trend is up, but I cannot ignore the fact that right now a weekly supply is being contacted, right? So I want to see moving forward, this is a monthly supply. Please don't forget right here, weekly supply in the monthly supply. And I'm finally moving to the daily chart. And that's where I'll stop for today. And actually all my videos, I'm preparing my swings first. When we're doing swings, we hardly ever want to kind of like focus on much lower time frames, right? So now these are weekly areas of value, and I really want to make them as tidy as possible. The daily area of value of EURUSD right now. This is the daily demand in chart, and it's been in chart since the middle of March, or from the beginning of March, so to speak, right? So you can see there were minor demands that were made in here to hold the base. There's a bullish engulfing pattern here that price kept hammering to protect the order flows inside this particular demand. Nonetheless, prices moved to the upside. When price made contact now from the daily perspective on the weekly supply, look at this, right? This is the first time we see it, we acknowledge that. The second time we see it, if you remember 365, our areas of values must be touched at a specific number of times for us to allow a specific type of confluence, right? And also to say we trust our areas of value. So this is the second time our weekly supply is being touched by daily charts, as far as I can tell. And more importantly, we also daily supply that's clearly heavily nested in between the monthly supply and the weekly supply. Excuse me. So I'm just going to draw a horizontal line right across like that. That is a very good selling point if we're sellers. I'm not a seller in this paper because already long term, I'm thinking about how to navigate some buys. Now that we know this about the daily chart, we now need today, this morning, those of you who are focused on scenario analysis on EURUSD, you'd have noticed a pump on your 1 hour time frame. A new demand was created today. This is an interesting, complicated 365 candles that don't give us the type of imbalance that we want. And so we're looking at another demand somewhere down here. Why there? Well, we've got a drop into price, right? We need a drop in price. We always need dumb retail traders to sell into a demand, and then we need a good enough imbalance to create it. So the only demands that I'm interested in are the ones I'm going to leave in green. So this big one, I am no longer that interested in this gray area because it's been overused, and anyways, there's been a fresh demand that's been created. The second one is this one, but this one, folks, for me, is how optimal price is because of whatever sentiment is out there in the world. I don't know, right? But I'm saying this is the only time you ever see me risk money on such a demand is if price first takes out the supply and then comes here to do that, right? Until then, this for me is not a good demand. And I'm not really a betting man. I am a calculated risk assessment trading officer, and that's what we all should be, right? We're not betting any. What would be ideal, and this is the dream now, is for Euro USD to push down. This is the type of trade I want. It's also the type of trade that I'm going to have to wait for if I want to trade Euro USD. But having done all this work, having done all this analysis, as you're waiting for your swings to set up, you can actually now start to plan your intraday trades, right? And it's time to wrap up, folks, right? If I go Akini Hashi, you'll see this is what I was saying about those complicated 65 candles. I suspected they would give us an order block. I suspected it. You remember, it did not give us a good imbalance. There it is there. See that there? Price moves. Let me show you again on the daily time frame so you're not confused. Those two red candlesticks on the daily time frame, when you switch back to normal candle, right here, strong impulse, retracement back down, price comes back into this red zone. Here it looks like the imbalance was not given. Continuation pattern where price doesn't engulf, right? There's actually a push to the upside, and then price comes back into our PCP again. Also high risk. I would not have considered this a demand, but price definitely like this, right? All the way down here in the green zone. This is what could happen with price. If price is in a rush to move up the way I feel like it is, I still don't know what the Fed is doing. I have to catch up on all that stuff, right? We could get something like this, a little bit of movement up, or even maybe into there, and then markets will come here. And when markets come there, markets could decide to go up. So let me delete this so you're not confused. So you can actually just get that, clean, right? So this is a possibility. This is one of those, medium risk probabilities, right? So this is a very, 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 very serious possibility of price playing out there. And I could take a trade like this, but I would have to accept you've already lost. You have to accept the risk as a trader to help you, right? So I could have two pending orders set on Euro USD. One here, the one on the lower would be my bigger trade. Not that I'm telling you to use big lot sizes. I'm saying bigger in a risk assessed way. So I could put only 2% here and 5% here, something like that, because this not working out is still a high possibility. But when I switch to a Kinihashi, I see what markets are seeing. I see that this demand has been used only once, right? I see that this demand is birthed from a PCP, so we only want to use it once. We really don't want to use it too many times. But it didn't make a big dent in the order block. Then I see that there's another area here. I hope this has helped your take on Euro USD. I do promise that moving forward, these videos will be much shorter because the idea is to really get 3 good assets per day up until the first Sunday of the month of May. I'm so glad to be back. I missed all of you. I'm just quickly showing you my scenario analysis chart, right? So that's Euro USD still on the 1 hour time frame. Never forget these simple teachings, guys. This is where you guys have had a couple of NFPs without me. I really hope the work that we did last year has been put to use. I really hope that someone somewhere is making money. So on the 1 hour time frame, you can see, I bet you that this area here on my 1 hour chart, this area here, it definitely is that daily demand that I want to buy at, the green zone that I just showed you. I'm pretty sure that this area marked up here, let's see. All right, so this 1 hour area here is that PCP, right? The complicated 365 candle, somewhere in there is a fresh 1 hour for my scenario analysis. And then on the daily time frame, we want to wait all the way down there. So you can see, I definitely want to buy a little bit here. And then if this doesn't work out, even there on the swings, but even on the intraday time frames, right? I'm still bullish. I'm still, rather long. I'm still long on Euro USD. I'm not that interested in selling, right? So if you dial down here, you're looking at, yesterday's trade on Easter Monday with a very clean, sharp drop down. You pull up your Fibonacci's and figure out why price stopped here. Then we'll have to see how price straddles around this area. But long term, Euro USD this year is looking like a good investment for buyers. Thank you so much for watching. Don't forget to hit the like, subscribe. Let's get to 1,000 subscribers before we start War Room. I promise you I'm not going anywhere. We're going to War Room from the month of May up until the second week of December. And I've got many exciting things that I would like to announce as time goes, given the type of contemplation I've had in the last 3 months. Right? Looking forward to your feedback on this video. 6-5. Peace, everybody.